Hey guys, hope you and the families are doing well. This is a live coaching session. Today's date is February 13th, 2026. I'm going to start off a little bit different before we start going through the bar by bar and see we've got various willing volunteers, which is great. I'm going to take you through what I think is very important. And if I could go way back when to the kind of start of my trading journey, if you like, this is exactly what I would focus on. So I often think about how would I teach my family members, how would I teach my children to trade when they get to that age. And this is kind of the journey that I would take them on and thinking more in terms of playbook rather than trying to learn absolutely everything about everything. Because I'm sure we have all been there, getting all done that, where you're just trying to learn everything about everything. You start reading about Warren Buffett, so you're like, oh, I'm going to be a value investor. You try value investing, you're like, wow, value investing is really, really difficult, I would say, and rarely kind of works. That was just my kind of experience of it. Then you go into kind of bulletin boards and you go into hype and you start reading about this, and you just try and then learn about everything. So you do penny stocks, you do value investing, you do swing trading, you do day trading, you do scalping, you try absolutely everything. What I would suggest instead is start developing your playbook of setup. So what I'm going to do is just take you through what I think is really important and how you can then adapt your playbook subject to the market environments. This is year to date. Okay, so far, if I just pop up the annotation tool, this take me, I don't know, 10 minutes or something to go through, but hopefully it'll be useful for you. And I'd really kind of encourage you to think about this. So for me, in terms of what I'm trying to do in terms of my trading is be very, very consistent, just kind of every day, every week, every month, every year, just be really, really consistent and keep that line basically going from bottom left to top right. So a nice, steady rising equity curve. So you can see here, okay, the general trend is up like this. Now you're going to have periods where you're flat, you're down, but generally speaking, you want the trend to continue moving up like this. So I'm going to take you through how I go about doing that, which we're going to do in the bar by bar. I'll take you through a couple of the kind of key playbook setups I target, but also then thinking about your own playbook and just kind of staying in your lane and trying to get better and better and better at your own playbook. Now, today we're going to specifically focus on ORBs and Immorellos because I think it's more of a market environment better suited to kind of shorter term trading. So mostly kind of day trading, managing the majority of positions intraday. However, there's obviously swing trading as well. So I think you want to be adaptable in terms of what type of kind of playbook setups are you using, how are you managing them based upon the market environment that you see yourself in, and then also thinking about what is the data telling you about your own setups. So let me just start taking you through this. Okay, so if we go on to the next one here, okay, on the long side I basically have five main setups that I trade. Okay, for day trading, that's going to be more ORB, so opening range breakouts. I'll tell you what, I'm going to keep this annotation tool on because then I can use this red pointer thingy majingy. There we go. So in terms of kind of like day trading, when I think, okay, the market is a lot more volatile, how do I want to be trading in that market environment? I don't want to try and be a swing trader or a position trader when the indexes are just doing this. Okay, and they're just chopping around all over the place as basically the chopper queues and the SPY has been since around about November of last year. Okay, they're just back and forth, back and forth, back and forth. I don't think that's great to be a swing trader or a position trader for the vast majority of stocks in that market environment. There may be kind of a select couple of groups and themes, a couple of kind of key leaders that go on big runs, but you see it with the relative strength. So we'll then kind of talk about that when we talk about other setups. For me, I'm also want to be kind of a day trader in that position, want to be or that market environment, want to be more shorter term orientated, okay? Both from the entries and also from the trade management side of things. So the kind of playbook where I focus, and again, why I'm then saying this, if I could go back 10 years ago and clip myself around the ear and say, don't try and learn everything about everything. And we've all done it, right? We've all tried to be value investors, penny stock traders, scalpers, day. We all try. What I would suggest actually is spend the time developing your playbook, which you may only have kind of two setups in your playbook. For me, I like the ability to transition from kind of a day trader to a swing trader, so swing positional trading, then back to a trader. I can do both. And also the kind of day trading setups that I target, ORBs and Immorello, so intraday mean reversion longs, I can also use those in a swing trading market environment to help get positioned in the leaders. Potentially they're kind of pulling back down to the 10 day or the 21 day, so I get an Immorello, or they're just powering up and through, so I get an ORB because it's not necessarily when I'm using, say, a buy stop limit order with a true bar or a shakeout demand or a gap down reverse, but I'm going to get filled where I want to get filled. So actually the way I kind of integrate the two is what I can do with an ORB and Immorello then feeds into the swing trading as well. The only thing that's then really different is the management style of things. So when I'm in a shorter term market environment and it's just choppy, it's all over the place, the indexes, stocks aren't really trending for more than a day or two. Okay, I want to be shorter term focused. I want to be using ORBs and Immorellos to enter stocks. I then want to be using primarily the 5-minute 6 EMA and the 5-minute 21 EMA to help guide selling decisions. Now, in a swing trading market, I can still use RBs, still use Immorellos, okay? But generally speaking, I then want to try and sit for the longer term trend. So I may be in a trade 2 weeks, 2 months, something like that, maybe even longer if it's just going to go on a huge run, say along the 10-day or the 21-day, maybe even the 50-day, but rarely do I use the 50-day now. So the thing that I then encourage you to do is really kind of think about your playbook, and rather than trying to learn a little about a lot, so you try and learn about value investing and scalping and this strategy and that strategy, really kind of hone down on what is your strategy. Like, what makes sense to you? What can you get really, really good at? And then keep on kind of peeling back the kind of proverbial layers of the onion. So you'll keep getting better and better and better as you start training your pattern recognition, and you go kind of vertical instead of horizontal. You go really, really deep with your knowledge about some very specific setups that are your playbooks. So when I teach my daughter to trade in probably a couple of years now, I will teach her one playbook setup. Like, you just do that. You get really, really good at that, then we'll add another one. Then you get really, really good at that, and then you'll add another one. And a couple of things here that I think are kind of key to write down or really kind of think about, I'd write them down as well, is if you're trading opening range breakouts, okay, what makes an A plus ORB setup? And there may be 50 criteria that you can think about. There may even be more than that. Like, what makes a really, really A plus ORB, like the creme de la creme, the best of the best? What makes them? And then you start going, okay, if that's the setup and you can clearly see the setup and you go, okay, when stocks then tend to go on a big move, it follows these characteristics. And we go for a lot of ORBs here. But then from that, how do they then move? So if you're going to manage it intraday, well, what are the best trailing stops to use? Is it lower the bar, lower the bar, lower the bar? Is it hold to end of day? Is it ride this moving average? Is it ride this moving? Like, what does the data say? And I'll take you through a couple of things in a minute. You can then also look back. This is going to be an important nuance. How does the stock's character affect the trade management from that type of setup? Because you may have noticed some stocks just don't ORB. Like, they just never work. Maybe they work 5% of the time, 10% of the time. They just don't go from ORBs. Well, how does that affect the trade management? And two, how does it affect if you even want to take the trade? Like, stocks that don't like to ORB or don't like to Immorello or don't like to go from trigger bars, so oftentimes low volume inside bars, I'm not going to trade those. Like, I'm going to avoid those for that proverbial playbook. I think that's how you can go a kind of layer deeper, if you like. And then ideally, I think you should have at least 100 textbook examples for whatever your kind of playbook setup is. If it's an ORB, have you got 100 textbook examples? Immorels, have you got 100? Then you just train the pattern recognition and you go, okay, this is what an A plus ORB looks like. And then look for those in real time. We talk a lot about how you can kind of set up monitors and things like that, so you can efficiently identify these type of opportunities when there's been intraday relative strength and things like that. But I really think if you're going to trade a specific setup, you should have at least 100 examples, if not closer to 500,000 examples of that. I know I do. So with like trigger bars, you should have hundreds and hundreds and hundreds of examples and understand the nuance of, okay, when a trigger bar forms, where does it tend to form on leading stocks? Is it the 10-day EMA? Is it the 21-day EMA? Is it the 50-day SMA? How does the 20-day ADR percentage, the average daily range percentage of the stock, influence where you may want to look for, say, a trigger bar or a shakeout to Martell? Oftentimes, faster moving stocks, so ones with higher 20-day ADR percentages, I don't mind looking for those around their 10-day EMA because it's a faster stock. Your slower ones, say, that have an ADR of maybe 2% to 3%, oftentimes I don't want to look for a trigger bar or a 10-day EMA shakeout tomato, so a shakeout tomato on the 10-day EMA or a trigger bar on the 10-day EMA around that moving average. It's just a too fast moving average for that stock. That's going to be more so the 21-day EMA, maybe even the 50-day. So this is how you then start understanding the stocks, how they move. But I'd really go deep on your kind of playbook and just ignore everything else. And you'll just start, I just think it's the number one thing you can do. Like, if you're struggling with consistency, I think this here is the number one thing that you can be focused on. Then I want to take you through this, okay? So what I would then suggest doing, I'm specifically going to focus this on, let's go with ORBs, but this is going to be applicable to all of your kind of playbooks. I'm just going to talk about it from ORBs, so otherwise I'll be here all day, but it's the same point, okay? So if we go here, okay, how to track your results. It's really easy to set up, okay? So if we're thinking about ORBs there, and let's just say we're thinking about it more so it's a kind of more volatile market environment, so we probably want to be kind of shorter term orientated from a trade management perspective, okay? And we could create a couple of sell rules, but first and foremost, I'm going to draw your potential equity curve trading ORBs. Now this is just hypothetical. This is not to say if you trade ORBs, you're going to be able to do this. It's not the point. All hypothetical here. Okay. So let's say here you get off to a decent start trading ORBs. Okay. And I got the wrong tool. Okay, let's get that. And then we don't want pink. There we go. Okay, so let's say this black line here is going to be you. So let's say you get off here and you start going, oh, look, I'm trading ORBs well. Maybe the indexes are trending up nicely as well. And then you get into a little bit of a rougher patch and you have a little bit of a kind of pullback here. And then you and then you do this and then you go and then you chop and then, oh, you have a good little run in here. And so maybe something kind of changed what you were doing. And then you do this and then here and then you kind of over here like that, right? So let's say that this here is you. So we're going to do a smiley face. Okay, this is you over here. Okay, smiley face. Now this is you using your discretion to exit. You're not following any rules. You take an ORB and you just exit because just going to press the exit button because I'm going to feel like it. Okay. Now let's say that you then track the data. So this is going to be really key, and I'd really suggest doing this. Whatever kind of playbook setup you're using, trigger bar, shakeout demand tails, gap down reverse bars if you're swing trading, or if you're trading, say, Immorellos and ORBs, do this using intraday moving averages because the data will then really help guide you with your decisions. This is so important now. The vast majority of people won't do this because it takes effort, but it's really, really important. So let's then go here. I use the orange as the 5-minute 6 EMA exponential moving average. Okay. So the same trades that you're taking, you can set this up really easily in Excel. Okay, is you could then see this like this, and I'm just going to do it really, really quickly. Okay, so this here is going to be the 5-minute 6 EMA. So I'm just going to go 5-minute 6 EMA. Okay, that's going to be the 5-minute 6 EMA. Now, what you notice here is, wow, there's a really big discrepancy between what you were able to achieve and what the 5-minute 6 EMA, and you say back to back closes below the 5-minute 6 EMA when the MACD goes negative or the MACD turns bearish, you exit. And you go, nothing has changed there. You took exactly the same entries, but the trade management involved no discretion and you just use back-to-back closes below a really simple moving average, such as the 5-minute 6 EMA. And you go, wow, that's really interesting. There's such a difference there. And then let's say we have the data for the 5-minute 21 EMA. So we'll do that. We'll do that in blue. Okay. And it's going to end over here. Okay. Let's do it here. So this will be the 5-minute 21 EMA. So we do this and it kind of gets off to a good start as well. And then it starts doing this and then kind of moves down here and then it goes a little bit. And then you have maybe a couple of good runs like that. And then it's down a little bit and then a couple of good runs in here and it finishes there. So, okay, we now have the data and the data starts influencing how we're then going to manage these trades. Because then we start looking at it and go, wow, the 5-minute 6 EMA is outperforming the 5-minute 21 EMA and it's significantly outperforming you. That's interesting. Maybe I should stop all this discretion and thinking I'm so smart and I exit here because I see a little supply and just follow some really simple moving averages. And then we also have the data for, well, what happened if you held to end the day? And i.e. you exited in the last minute of the session. What would that look like? So really simple data to collect, okay? And what we may see with end of day, okay, I'm actually going to do it up here. I'm going to go EOD for end of day. Now, what we could see with end of day, and maybe something like this, maybe it gets off to a really good start and then potentially it gives back a couple of profits, but then, oh, it really starts trending. Maybe you get into a good market as well, okay? And things are kind of trending strong and then it goes down and then you get a couple of runners like this and then pushes there and then something like this. So what we then have is we have the data for how are you performing. So let's then go back to, let's maybe just pick a pink or something like this. So now we have the data for how are you performing? And I really do stress, this is all from your own trades. So if you think about that playbook we are just going for, ORBs, Immorellos, trigger bars, shakeout demand tails, gap down reversal bars. Okay, we now have that data for these specific kind of playbook setups. And this is then how you start refining it and you start getting better at something and it starts getting really consistent and really repeatable because you know exactly what you're looking for and exactly how you're managing it and the data is influencing your decisions. So this data here, imagine if this is the kind of P&L from these. What we then see is, okay, well, you're fourth. You are 4 out of 4. And this happens to me, by the way. When I try and outperform with, say, ORBs or Immorellos, when I try and outperform the 5-minute 21 EMA, the 5-minute 6 EMA, or holding to end of D over a large series of trades, let's say 25, 50, 100 trades, I cannot do it. I can't beat it, guys. I can't beat it. Why am I talking about this? How do I know? Because I've done this. I've tried to beat these. And then you look at the actual reality of the situation and go, wow, I can't beat any of them. Over 50 trades, 100 trades, I would be absolutely staggered. I dare one of you to try and do it. Try and beat over 50 trades with Immorellos or OLVs. Try and beat these 3 simple sell rules. 5-minute 21 EMA, 5-minute 6 EMA, holding to end of day. End of day. I won't bet you. I'm not going to bet you, but I think you'll be pretty staggered with the results, especially if you actually see it from your entries. And oh, if I just manage the position like that, back to back closes below the 5-minute 21 email, back to back closes below the 5-minute 60 email, holding to end of day and end of day and selling in the last 2 minutes, 1 minute or so, and just seeing how it goes. So this is what I'd really encourage you to do in terms of collect that data. Really simple to set up in Excel. Maybe we can go through that next week or something and start thinking about your playbook and kind of really dial in on it. I do think it is the number one thing you can do to then kind of gain more consistency. Like when I stop pissing about and just get consistent on trading these and managing them, how the data says, you get more consistent. That is, that's my view. That's what I'll